VDA is a voluntary disclosure agreement. And as a reward for stepping forward voluntarily, the state is going to limit the look back period and they're going to waive penalty. So right away, by doing a voluntary disclosure agreement, anything older than that 4 years period, you don't have to pay any of the back tax, penalty, or interest. And in that 4-year period, you don't pay any of the penalties. So it's a great tool, but just like any tool, it's not a one size fits all. And here's what's important. There are some software companies out there that say if you owe more than $500, you need to do a VDA.
Yeah.
By the way, our fee to do a VDA, this is the software company, is $3,500. My question is, why in the world would you pay anyone $3,500 to remit $500 in tax for? So you gotta be careful. A VDA is a great tool, but it's not a one size fits all tool. We've had people come to us that owe maybe $20,000, $30,000 in tax, and they're saying, hey, this company wants $100,000 plus to do VDAs in all these states. I don't know how some of these salespeople get up in the morning, look at themselves in the mirror.
Shysters.
You got to make sure it actually makes sense. And the basic rule of thumb there is, am I going to save enough money by doing this VDA to cover the cost of the VDA? So that's the rule of thumb that I tell everybody.
You're listening to
What the Tech?
Welcome to the What the Tech podcast, where we talk about business and office technology and put our 20 years of expertise to discussing trends and issues impacting the workplace.
This podcast is brought to you by Global Tech Worldwide, your technology office experts that's been around for 20 years, providing trusted, personalized office IT solutions. Check them out at amazon.com/TECK. That's amazon.com/TECK.
Still paying for slow, outdated business internet? Why would you do that? Everything is so expensive in 2022. But listen, you might not realize you can go to circuitloops.com, instant quotes to easily compare with what you're paying for and find the upgrade that's right for you. It's that easy. Go to circuitloops.com.
Hi there, it's Rolando.
And I'm Dave.
And welcome to What the Tech, where we talk about business and we talk to business influencers as well as tech influencers to get their perspectives on what's going on in the workplace so that you can grow your business faster. And today you will get somebody that will also help you avoid costly mistakes to your business. Isn't that right, Dave?
That's right. Before we bring on our guest, Rolando, we want to give big props to a partner of ours out there.
Okay, go for it, Dave.
Listen, really want to give big props to the folks over at Poly, especially Misrael. Misrael, thank you so much. Listen, these guys are fantastic. We've been a partner for Poly, formerly Plantronics, for a very long time. We love and trust their solutions. More importantly, our customers love their solutions. But Misrael, thank you so much. You guys are launching a new product. It's called the Poly, what is that? The Poly Voyager
free 660. Say that 3 times fast, Dave.
Yeah, and I'll tell you, these are commercial quality earbuds for professional phone calls, professional voice, and also for listening to audio. Thank you so much, Misrael, for sending us some demo units. Been using them for about a week now. I'm absolutely in love with them. Pretty soon, Rolando and I will start some product demos, some comparisons. And listen, I can't wait to get some of those done. We always have fun doing those comparison videos, Rolando.
No doubt, man. I love it. In the car, dialing up the computer, getting on and making sure that the stuff actually works as advertising. We don't just do check 1, 2. Can you hear me kind of test, which you see everywhere.
Yeah.
We do those, actually see it work in real world situations, not just sitting down at a desk doing mic 1, 2, like what you may see elsewhere.
So listen, if people are out there and they want to see some more product demos and comparisons in real life work from anywhere environments, like Rolando has mentioned, check out our YouTube channel, youtube.com at Global Tech Worldwide. Look at some of these comparison videos, demos. If you like it, like and subscribe, give us a thumbs up. And now, Rolando, back to you.
All right. Thank you, Dave. Today we've got someone that will, like I said earlier, will save you a ton of frustration, time, aggravation, and potentially thousands, if not tens or hundreds of thousands, because we have some really big brands that listen to us, and they could potentially save hundreds of thousands of dollars by just listening to what Mike has to say today. So if you want the full experience today, I will remind you to use your headphones because we will be throwing in some special effects and everything else, and you'll get that full, rich experience if you're listening to us on the podcast. So let me tell you a little bit about Mike Fleming before he comes on. So Mike's state tax knowledge is well-rounded, and he has helped thousands of companies of all sizes and industry. He's especially well known for his work in the e-commerce industry and is the founder of Sales Tax and More. Sales Tax and More is a full-service consulting and solutions firm. Their team is experienced with tax professionals, seasoned tax professionals who are dedicated to fulfilling your state tax and related needs. I believe he also does stuff with north of the border in Canada. So if you're interested in that, he handles that too. They do sales tax returns, registrations, consultations, research, a whole lot more. I'll let him jump in and talk about what else they provide. So let's welcome to the show, Mike Fleming. Hey, Mike.
Hi, guys. Thanks for having me today.
Hey, we love talking to you, and we really love that you're on today because there's so much going on in the e-commerce space. The Supreme Court decision with Wayfair really kicked off a lot of aggravation for sellers that are selling online, whether they're selling on their own website or selling through one of the marketplaces like Amazon. And so a lot has changed since the decision, a lot both on the marketplace side and a lot of responsibilities for sellers. But before we jump into talking about things that are costly that you can help our audience with, I want to ask you, what tech is bubbling under the surface that you're fascinated with, or you've been researching, or just geeking out on right now?
It's got to be this AI. It seems to be all over the news right now, and a lot of people are a little bit worried about it. You got that science fiction aspect. Are we going Terminator?
Skynet's taking over. Choo, 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 choo,
Yeah,
choo.
exactly.
So you're saying you're geeking out on AI, artificial intelligence. I find that fascinating. It is evolving rapidly, Mike, and we use ChatGPT and several other applications in-house. We actually have given, because saying ChatGPT every day as often as we communicate internally is hard. So we just call him Eddie.
Yeah.
Eddie? We call him Eddie. We call him Eddie. So if somebody says Eddie in a conversation, we all know internally who we're talking about. Just in ChatGPT, saying that 40 times a day is hard on my tongue. I don't know, but
Yes.
so we just given him a name, Eddie. So Eddie does pitch in and help out with a bunch of things. I know you personally, you've worked with a bunch of companies. If you were to start off talking to an Amazon seller, somebody is on the marketplace, I want you to fill in the blank here for me. I'm going to give you a statement and I'm going to tell you blank. So fill in the blank for me, Mike. Amazon sellers should never blank. I'll repeat it again for you. Amazon sellers should never blank. What would you fill the blank in with?
Should never pay sales tax. How about that?
Well, all right.
Amazon sellers should never pay sales tax. All right. Tell us more about that. Why is that?
When Wayfair happened, there was a lot of bad news for e-commerce in general. You got to collect tax in a lot more places. But for marketplace sellers, and Amazon is a marketplace platform, they're the ones responsible for collecting and remitting the tax. Amazon sellers no longer have to worry about, or eBay sellers, anyone selling on a marketplace, they don't have to worry about collecting and remitting the tax anymore.
Which is awesome.
And other countries.
There was a frustration before, right? To remit to
Right.
all these different states.
Absolutely. Now, if you're selling on another platform in addition to Amazon, you still got some of those issues. But when I say another platform like Shopify, Shopify is not considered a marketplace. So you do have to be concerned about collecting and remitting the taxes. If you have some sort of link or connection with the state, we call that link or connection nexus.
Okay.
A lot of ways, Wayfair actually did some e-commerce sellers a big favor and others not so much.
And for those who aren't familiar, just give us a quick summary on what Wayfair, for those folks that maybe are just discovering this for the first time. What was the Wayfair decision? What was it about that caused this big change?
Yeah, there was a South Dakota, and they went after Wayfair, and they said that if you have $100,000 or 200 transactions in our state, that's enough of a connection with our state. It doesn't have to be physical anymore. We think this economic nexus, this connection, this amount of sales or transactions is enough to require you to collect and remit our sales tax. And it went all the way to the Supreme Court, and the Supreme Court surprisingly sided with South Dakota. And they said, yeah, you don't need a physical presence anymore. As a matter of fact, it's not because time changed, we made a mistake. We never should have used the term physical presence to begin with. So it's like all those other cases that said you needed a physical presence, it's like they never happened. So physical presence is still out there, but it's not the only way you can have a requirement to collect and remit taxes now. It could just be by selling into a state once you cross a certain threshold. And the
Right.
states
And that,
never make it easy.
right. And since we don't operate like in some other countries, like maybe France or other locations where they're provinces, they're all operating under the same system. All the states are collecting, or provinces may be collecting the same amount of tax, or all funneled through the federal system and then redistributed back to the provinces. We have this hodgepodge collection of states that can do whatever they want and determine what a physical presence is and what it means defined by their state law. And Mike, before we jump into that, because this is such a tricky, thorny issue, and I know you and I, when we were first conversing about it, it was just like my head was spinning, especially when we get into the nexus aspect and the inventory aspect and what constitutes physical. I want to probe your brain with the segment we call our best kept secrets.
Well kept secrets, gotta keep them safe and sound. Well kept secrets are just like diamond.
We want to thank Eddie for putting that together for us. They put together this composition. So I want to give Eddie props on that one. Big props to Eddie. So, Mike, there are some secrets here that most people don't know that could help them avoid costly either litigation or hot water when it comes to the states. Let's jump into that because that's where you're kind of going into. And I know that when it comes, let's start with physical presence. What is it about physical presence that people don't know about that's happening either right now in real time or has happened where it's tripping up a lot of people in business?
You touched on it a little bit. Inventory, even though Amazon is collecting and remitting the sales tax, if you're selling on other platforms like a Shopify, that inventory in an Amazon warehouse can still create nexus for you. A lot of people don't realize many states, especially California and Florida and Illinois, and some states have modified their position so that like Texas, if you only have inventory in a Texas warehouse and that inventory is only being used for the Amazon sales, then it no longer creates the link or connection we call nexus. But if you're using that Amazon warehouse to fulfill some of your Shopify sales, now it does create nexus.
Let's pause on that because that's an important aspect of this because this is for those people using multi-channel fulfillment by Amazon. So if you're doing multi-channel fulfillment on Amazon, and what you just said is that if your inventory is in the state of Texas, and for whatever reason, Amazon uses a warehouse in the state of Texas to ship out your order, whether it's in or out of the state of Texas, you've got now some nexus problems to be concerned about.
Correct. But you'd only have to worry about those problems in the state of Texas. All right. So nexus just means that there's a link or connection with that state, and therefore you may have a responsibility to collect tax in that state. And tax is usually sourced to the state where something is shipped. So you've got this nexus in Texas. Now, pretty much any of your sales that are shipped into Texas, there's a responsibility, no matter where it's shipped from, to collect tax on those sales.
And once nexus is created in the state of Texas, I want to be clear on this too. This is heavy because Texas, even for us, is in our top states of sales overall every year. I have 1 unit of advice. That's considered nexus, right? And if that order came in through my Shopify store, Amazon then shipped that on my behalf to a customer in or out of the state of Texas, that 1 unit constitutes nexus, right?
In theory, yes. The states are not good at all at explaining what's de minimis.
Here comes a pro tip.
De minimis means a little. In other words, it's so little, it doesn't meet the requirements.
Okay.
It's an exception to the rules if it's below a certain level. Now, some of the states talk about de minimis activities, but in some areas like trade show appearance, de minimis activities are spelled out very well in some states. But when it comes to something like inventory, a lot of states they don't have a minimum. They say if you have inventory in our state, then that creates this link or connection with that state. We saw a court case in Pennsylvania, and they said that having inventory in an Amazon warehouse in Pennsylvania was not enough to create this link or connection for sales tax. And a lot of people think that it doesn't create nexus at all. But what Pennsylvania has been very active in doing is going after Amazon sellers for income tax. That's one of the
Individually.
reasons why, it depends on the type of company, they could go after individuals. If you're a pass-through entity, then they're going after the individuals. If you're a corporate entity, they're going after the entity itself. Now,
Gotcha.
when it comes to sales tax, and this is an important thing also, there's individual responsibility. So if you're not remitting your sales taxes, the state can actually come after you individually. In some states, you have to have collected and not remitted the tax. But in some states, if you just don't collect the tax, even though you're a corporation, the state can come after you personally.
Wow.
Personal liability is a big issue, and a lot of people just don't understand. Sometimes people tell me, I'll just bankrupt my company. And sales
And you
tax
still have
is one of the-
liabilities, right? I've talked to people that have gotten in hot water. What happens in that situation? And people say things, but what actually happens? You get in hot water, in this case, a state, which is a little different than federal. We don't have a VAT system, so they don't collect tax that way. But the states like Pennsylvania that you're just talking about, what are they doing? You say, oh, I'm going to just bankrupt so I don't have to collect. What happens?
It used to be that even though we said we had national banks, they were really licensed in each individual state. It was like having a bunch of different banks. Not so much nowadays. A state like California will walk down to the local Bank of America and put a lien on your assets. They'll freeze your bank account. States have a lot more powers today than people give them credit for. 30 years ago, they couldn't do that. Today, they can. And people always fear the IRS. States are a lot more aggressive than the IRS is at this time. This is not the IRS of 30 years ago where they were taking people's houses and everything else. But the states are very aggressive, and sometimes they'll work with you if you can't pay the money that they say that you owe. And other times they want to make an example out of someone because fear works in their favor.
Right. I can see that. I could see
Yeah.
that.
So, Mike, so what do you say about Amazon sellers that are shipping inventory to FBA? So we might ship to a warehouse that's in Pennsylvania, and then Amazon may take that inventory and allocate it to multiple different warehouses. If you're supposed to pay an income tax with where your products are being stored, how do you consult Amazon sellers on that aspect of it? Sometimes we know where we sent it, but we not necessarily know where it is all the time. Is that a challenge?
Yeah, it's a challenge, but the state of Washington said, if I can tell where your inventory is, then you guys can figure it out also. There's the inventory event detail reports. If you look at your sales reports, it's telling you where it ships from. So there are ways to tell where your inventory is. It's not easy. Amazon doesn't make it easy, but there
Sure
are
doesn't.
ways to tell. Income tax is an issue for larger sellers. It's not an issue really for smaller sellers.
Can you
And the
define
reason
that,
why,
Mike? That's definitely one of our other secrets. That would be secret number 2. I would put a big point on that because is there maybe a hard rule that when you're consulting with your clients, is there, when you say larger sellers, is that 1 million or more, 5 million or more, 10 million or more? Where's that number for you, that barometer?
it's going to change all of the time because what your profit margins are going to have an impact on that.
Okay.
If you're a $100 million seller and you're working on a 2% profit margin, then, you may not have as big an issue as someone who's a $20 million seller with a 50% profit margin. So
Gotcha.
your profit margins, because income taxes are usually based upon your net income after expenses. So unlike sales taxes, which are based upon the gross revenue, the income taxes are after everything comes out. So it's usually going to be a lot smaller number, and it's going to be different for every seller. In general, California is going to say $500,000. If you've got $500,000 of sales in California, then that is when they want you to start paying income tax on a economic basis. But what you want to look at here is what's your net income apportioned to a state like California. So the way that the income taxes work is every state has what's called an apportionment factor. California happens to be a single sales factor. So you take your sales in California divided by your sales everywhere. You come up with a percentage and you apply that percentage to your net income. And that is going to be the amount of income that's apportioned to the state of California. And then the taxes would be paid upon that amount.
And does that depend on being in-state or out-of-state? Doesn't matter if you're an in-state registered or out-of-state. You still got to pay the percentage
Well, it
of your
depends.
net income to California because they're saying a percentage of your sales came from California.
Correct. But it's not every state. So some
Okay.
states don't have a bright line economic nexus when it comes to income tax. We're starting to see that, and I think we're going to be moving towards that. But right now, there's 11 or 12 states. California is one of them. So what trips up Amazon sellers is that California says, if you have inventory in our state, then you automatically have to file the California franchise tax. That's what they call their income tax. But let's say that you're a true remote seller, that you're selling on Shopify and you're shipping everything into California. It started out at 500,000. I don't know the actual number today. It's adjusted every year for inflation. It's low 600s or something like that at this point. But if you're over that threshold, then you also have to think about paying income tax. Now, it's harder for them to find you when you're over that threshold because the franchise tax board doesn't speak very well with the California Department of Tax and Fee Administration, which is
So
the
these are two separate
agency.
departments, the franchise folks or income tax folks and the sales tax folks in the state of California.
in the state of California. Most states, it's the same agency. State of California, two totally separate agencies. They don't always speak very well with each other. So it's harder for them to know what your sales tax is, because if they knew that, then they'd know your sales approximately what they were.
What a
So
freaking mess, man. That is
yeah,
just a mess.
here's the other thing. What happens if you're selling a lot of wholesale? Well, you don't have to worry about that for sales tax, but for income tax, you do. It's easier to get over that number. When you asked me earlier, what's a line in the sand? What's a small seller? I usually can't figure that out because materiality has to play into this also. If the cost of compliance is going to be greater than any penalty or interest you get, then why bother doing what the state says? Or it's a small enough number. If you ever get caught, you pay it out of your pocket. Now, people say, what's that number?
What's
You
that
know, I
number,
just,
Mike? I want to keep as much money in my pocket and give away less of it so it goes out of my pocket.
I wish I could answer that, but I used the Coca-Cola example. $100,000 to Coca-Cola, that's like a rounding error.
I didn't even see
That's
it.
not a very material number to them. To me, $100,000 is a whole lot of money. So that's why it's hard for me to put a number, and we got to go back and what's material to you? At what point do you say I have to pay attention to this? Because if the state did come after me, that's a big number. That would impact me. I wish, the penalty and interest on it, I wish I had paid this at the time.
And
So
hadn't you
that's the
said,
type.
and hadn't you said on that point, I think you had mentioned this to me, or maybe you said this at some point along those lines, that California specifically, they were doing a look back period and retroactively looking at penalties and interest. So it would behoove sellers to come out of the woodwork if that penalty and interest, because they were looking back, not just the day you start filing, but they're looking back to your history on sales tax. That could be a significant amount for some sellers, because it's not just for what's happened now and you decide, oh, I'm going to get in compliance. They're going to go back, right?
Yeah, absolutely. And one of the things that California did is they got a list of sellers who had inventory in California, and they're working their way through that list. So they've
Still
been coming
today.
after people still today. So they start out in 2018, and then they roll it forward from there. Once you get 2018 taken care of, and they say, what about 2019? Now, here's where it really pays to be proactive rather than reactive.
Get ready for a pro tip.
Why is it good to be proactive instead of reactive in the state of California?
Less penalty, less interest. The state's still going to charge you penalty and interest. Okay. However, they start lumping all sorts of extra. We contacted you. So therefore, there's this much extra in penalty. And you didn't pay within this amount of time. There's this much extra penalty. So if we want to limit the amount of penalty and interest, it's better for you to contact the state and let them know that you're going to be filing. Now, there are also programs out there called voluntary disclosure agreements. If your exposure is big enough, you can reach out to the state and say, hey, I owe income tax for the last 5 years, 6 years, 7 years, and we want to come clean. And the state will say, okay, thank you very much. We're going to waive the penalty, and we're only going to go back this many years, depending on what state it is. So there's a formal program.
And you've had success with your clients on this. I think I talked about this, how states are more forgiving when you take that stance rather than screw it, I won't, or I'll wait till they contact me about this.
Oh, yeah. I always wonder why people want to wait, because these problems are not going away. They're just growing with time. And if you're not registered, in theory, the state can go back to the first date you started doing business 20, 30 years ago.
Ooh.
In reality, they don't go back that far. In reality, they only go back 7, 8, or 10 years. That's what most states are. I say only tongue in cheek, because 7, 8, or 10 years is still a long
It's
time.
still depending on the
Sure.
sales, right? It could be a significant chunk of dinero.
Yeah.
I'm not surprised to hear California looking to collect their fair share of taxes. Makes a lot of sense. I think everyone would agree. I think they might even have the highest sales tax in the country today. They about 10% with sales tax.
It's up there. I don't think it's the highest, but it's definitely
Okay.
in the top tier.
Sure.
Louisiana, those parishes are absolutely crazy with some of the rates that they have there.
What I wanted to ask is outside of California, are there other states that are like really cracking down? Any other states that our viewers might want to be extra aware of?
When it comes to sales tax, let's talk sales tax first. There are two really aggressive states, and I expect more states to follow. It's Illinois and Wisconsin. And what
Oh,
they're
okay.
doing is they're auditing everybody. Once you get registered, a lot of people say, I'll just get registered on a going forward basis. You have a lot of clients who do that. But these two states will let you do that. And then a year down the road, 2 years down the road, they're going to come back and say, okay, we want to make sure that you use the correct date and we want all of this status. So they're going to audit you as to when you actually started. We had one client who got registered in January of 2019, and Illinois went back to October of 2018. They wanted that 3 months worth of tax. We're seeing everybody who's registered in those two states go back. So you want to be proactive in those states. You want to ask for a VDA. We will not do prospective registrations anymore for our clients because we're just setting them up for a problem. It's not if the state's coming, it's when the state is coming in those two states.
Wow.
So they're really checking those threshold dates. When did you actually cross that threshold?
So what you're saying is, I'm just making this up because I don't know the number in Illinois. If Illinois says you must register if you're over 100,000, and if you've been like on the sly, like I've been selling more, but and then you go register, they're gonna go see that you actually cross that threshold.
Correct. And Illinois happens to be one of the states that has a 200 transaction threshold. So it's even worse. So you may cross that 200 transactions prior to the $100,000. So there's really three different ways to get registered. One is prospectively, you're just going forward, and we will not let our clients do that anymore in those two states. The second is historically. That's when maybe it was 6 months ago and the amount of money is not that big. Sometimes it's actually cheaper to do a historical registration. You tell the state exactly when your nexus began, and then you file back returns and ask for a penalty waiver. You may or may not get that penalty waiver, but it's a lot cheaper to do it that way. But you're going to hire someone like us to do a VDA. There's a cost involved, and returns are cheaper than VDAs. So
What's a VDA?
with
Can
the
you
VDA,
explain what a VDA is?
VDA is a voluntary disclosure agreement. And as a reward for stepping forward voluntarily, the state is going to limit the look back period, usually to 3 or 4 years, and they're going to waive penalty. But in some instances, there's only about 7 states, but in 7 states, they'll waive some or all of the interest. Like Texas waives 100% of the interest. Oklahoma waives 50% of the interest. But in Illinois, we're coming up on 5 years, October of 2018, and their VDA, they'll only go back 4 years. So right away, by doing a voluntary disclosure agreement, which is called the VDA, you're anything older than that 4 years period, you don't have to pay any of the back tax, penalty, or interest. And in that 4-year period, you don't pay any of the penalties. So it's a great tool, but it's not just like any tool. It's not a one size fits all. And here's what's important. There are some software companies out there that say, if you owe more than $500, you need to do a VDA.
Yeah.
By the way, our fee to do a VDA, this is the software company, is $3,500. My question is, why in the world would you pay anyone $3,500 to remit $500 in tax for? So you got to be careful. A VDA is a great tool, but it's not a one size fits all tool. We've had people come to us that owe maybe $20,000, $30,000 in tax, and they're saying, "Hey, this company wants $100,000 plus to do VDAs in all these states." I don't know how some of these salespeople get up in the morning, look at themselves in the mirror.
Shysters.
You, yeah, you got to make sure it actually makes sense. And the basic rule of thumb there is, am I going to save enough money by doing this VDA to cover the cost of the VDA? So that's the rule of thumb that I tell everybody.
In other words, you have to do the math. You have to talk to an expert like yourself or otherwise that actually knows the cost to benefits. And then you can come back to your client, say, here's what it's going to cost you to be compliant versus what you can go up with a flyer and see if the risk is worth it.
Right. And in a lot of states, that's what our clients do. They take a flyer. We let them know which states that they can take a flyer and which states they definitely don't want to take a flyer on. Now,
What are your
here's
thoughts
the-
on it? What I was going to ask you, as you're saying that, what are your thoughts, especially now when times are tough? Talking about taking a flyer versus not. Aren't states more aggressive as well when the money gets tighter, the tax revenue shrinks up?
Yeah.
What happens then?
Absolutely. That's a great point. We never know which state is going to become aggressive next. For example, it took 3 years for Illinois to start auditing everybody. So you may be okay for 3 years and then they're going to come back. So any state you're taking a flyer on, there's always a risk that the state will come back. And right now, it's like the perfect storm. States know that roughly 50 to 60% of companies not compliant for economic nexus. And they
Is
were
that right? Is
gearing
that
up
high?
to start. Yeah, it's that high for a lot of reasons. But the states are gearing up to start tracking those people down. So they're already gearing up. Now we got talk about the recession and things slowing down. We've already started seeing tax revenues start to shrink. And historically, whenever there's been a recession, states need money, especially during a recession. They've got to put out more services for their constituents. They increase their auditing and they increase their discovery efforts. Discovery effort means they're looking for people who are not paying taxes that they think should be. So you've got the states already gearing up. Now we've got this recession. I think that's the perfect storm. And we're going to start to see a lot more people get contacted, a lot more states joining the list of Wisconsin and Illinois. It's going to be tough out there.
It's a real double whammy for business owners. So if their sales are down and then the states are looking for more of tax, man, they're bleeding out of two ends at that point.
Yeah, absolutely. And here's the thing. That's why I say it doesn't pay to procrastinate because look at this economic nexus. No one had any exposure prior to 2018. That's when the Wayfair case happened, June of 2018. And people procrastinated for whatever reason. And now that they've got going on 5 years worth of exposure, the quicker you take care of this, the less likely a state is going to find you and say, okay, you owe all of this money in a lump sum, or we'll give you a payment plan. Whereas if you're collecting it every month and remitting it every month, yeah, there's a cost of compliance. But that cost of compliance is going to be pennies compared to the dollars that you could owe. Call that the greatest tragedy. You're collecting sales tax from someone else and remitting it to the state. Only now, because you didn't do that, it's coming out of your pocket. You're paying someone else's liability with the added insult of penalty and interest on it. You don't want to
Amazing.
procrastinate. A lot of companies say, I don't have the money for the compliance. It's counterintuitive. It's those companies that really need this more than anything else, because if you can't pay the state when they do find you in a lump sum, you could be out of business.
Right.
Whereas if you're paying them all along, yeah, there may be issues, but those issues are going to be minor compared to not paying and just kicking the can down the road.
So it's really sometimes the choice of bad and worse, right?
Yeah.
It's not that there's a great option like good and better. It's just bad and worse. What's worse versus bad? I'll take bad versus way worse. Let me probe your brain about when it comes to the nexus issues and the income tax issues in the Amazon world and a lot of other sellers now outside of the Amazon world. There's a lot of grumbling about companies that are based outside the US, in particular Chinese sellers, because they tend to be the most egregious when it comes to extremely low prices, playing hardball, dirty tactics as well. There are other countries, but they're at the top of the list for all three of those. Are these regulations that are in place, let's just call them regulations, are these regulations in place for all sellers selling products in the US, in these states? Or are you seeing that the sellers outside the US are not, they're in that 50 to 60%, or they're just ignoring it altogether? What's your thoughts on that? Because I know there's a lot of sellers that probably want to know what's going on there.
We're seeing more and more compliance, some of it voluntarily, some of it not, from the international sellers. They follow the same rules as when it comes to sales tax as those sellers here domestically. State of Washington, there was a big Chinese seller. They were actually in mainland China, not Hong Kong or anything like that. And they contacted one of their representatives in Canada, and we got involved at this point, and they said, hey, please tell them that good luck. We're in China. Let them see them get their money.
What?
In the state of Washington.
What?
Yeah. Well, here in the U.S.,
What
the
the
states
tech?
have a lot of power. Yeah, exactly. States have a lot of power. We talked about how they can go after the bank accounts. How can you get a bank account when it's in mainland China? That's kind of tough. But here's what the state of Washington said. They said, okay, if they want to take this position, here's what's going to happen. We'll give you 30 days to comply. If you don't reply, we're going to do an estimated assessment. By the way, estimated just means we're going to make up a really huge number, because if we're going to make a number up, it might be huge. Then we're going to give you 30 days. And if you don't pay it in 30 days, we're turning it over to our collections department. And here's what the collections department is going to do. Number one, they're going to go after any inventory that you have at Amazon. Number
in
two,
the state of Washington or outside the state of Washington in this example?
they're going to start inside the state of Washington.
Got it.
But they have reciprocal agreements with other states where they could go after some of the other inventory. A little bit tougher. Number two, accounts receivable. States go after accounts receivable. California will go after your vendors if they make you pay the state rather than paying you. It's been
Really?
done before. Oh, yeah. So that's the second thing that they're going to do. And the third thing they said, we're going to pressure Amazon to no longer do business with you. And it was that third thing that got their attention. They owed well over $500,000 in taxes. They ended up paying. They settled up with the state of Washington. So
They can play hardball, those guys. Think if they can force those Chinese sellers to, give up the money.
yeah. Now, sometimes these Chinese companies are going to shut down and open up another company. But then you got to worry about building the Amazon reputation and everything
Right,
else.
all of that.
We're seeing more voluntary compliance as education. More and more sellers in foreign countries are starting to become compliant. One of the reasons is they see some of these countries out there like the UK going backwards and going after these sellers. The trend is in the favor of them registering voluntarily. But for those who don't, one of my predictions is once we get this handled, and it's hard to get Congress to do anything, and maybe this administration won't do anything with China, but on a going forward basis, I think one thing that Congress could agree on is protecting the U.S. sellers from the foreign sellers. And
How
I
so?
think that passing something along the lines that makes it easier to pursue some of these foreign sellers or prevent them from coming into the country in the first place if they don't become compliant up front. So I don't know exactly what that's going to look like, but I think there will be enough pressure. You've got so many different sides fighting about the domestic stuff, and we've got to consolidate all of this right now. But I think the states and sellers will agree we got to do something against the foreign sellers. And you put enough pressure on Congress, I think that this is something that we could see some movement on because who's going to not want to protect U.S. sellers from unfair foreign competition?
If you were to sit there at the table and you got the senators and members of the House, they all want to stand up in front of the cameras, right? But if you were to advise them and say, hey, Mike, are there 2 or 3 specifics within that? Is this a mechanism that would then be passed on to Amazon as you register? Would this just be a law that then applies to all sellers from date X moving forward? Because the thing is, then we pass the law, but who at the end of the day is going to execute and then enforce? What would you advise? I'm 20 minutes away. If I had to go there and you came with me and we sat down in one of those hallways and in conference rooms with senators and congressmen, what would you say?
It's tough. It's tough for me to believe that government has the answer for just about anything, because whenever we get them involved, there's always unintended consequences.
No doubt. No doubt.
I would like them to be as minimally involved as possible. I would like them to just make it easier for the states to pursue these international sellers. Maybe do something with the customs and border, or when the goods are being shipped into the US, they could put it back on Amazon, but Amazon is collecting and remitting the tax for them on the sales tax side. Income tax, it's another story, because you've got the tax treaties, and the tax treaty says that if you don't have anything here other than inventory in a warehouse, this is the federal tax treaty. What it basically says is that you pay the taxes in your home country. Most countries have tax treaties with the US. Now, states are sovereign, so not all states will comply by the tax treaties. There's 13 states that say, I don't care what the tax treaty says. Here's what I want.
Damn you, Uncle
And they're gonna
Sam.
make
I'm
you do
giving you a middle finger. That's what you're saying.
Exactly. We want our money and you can't keep us from it.
Right.
So they'll make these foreign companies do a pro forma U.S. tax return, a make-believe U.S. tax return. It's not filed with the federal, with the IRS, but the states use it in order to populate their state tax returns. So it's a lot of extra work for these foreign companies. But New York and Pennsylvania and Florida says they follow the tax treaty, but we've been getting a lot of issues in Florida. California, they don't follow the tax treaties. Yeah.
If you're selling from another country in the US, your chances of selling goods into California, New York, and Florida are very high. The percentages are just not going to work out. The numbers you're not going to pull a lot of sales out of Wyoming or South Dakota or North Dakota like you would in California, Texas, or New York.
Correct. So roughly, someone's sales into California right around that 15% area. They may be 12, they may be 17, but it goes along the population. So your sales generally, percentage of sales into one of those states usually matches the percentage of population within that state. So Texas is going to be 6, 7% or so. Each state you look at, it's going to be close. And in a state like Wyoming, it's less than 0.5% of the country's population. So not going to be a big issue for you, but California, that's going to be a huge issue. And not just for foreign sellers, for U.S. sellers also.
No doubt. No doubt. Mike, I would love to jump into one other thing with you here. We have a segment called the rapid fire segment. All right. And it's just what comes to your mind. Yeah, in this one, there's absolutely no right or wrong answer. It's just what's in your brain. What do you think you feel about it? What's the word that comes to you? So, first word that comes to mind, here we go. FBA.
No longer have to worry about sales tax if you're only selling through FBA.
Awesome. Amazon advertising.
Advertising generally doesn't create nexus, so I don't have strong feelings either way on that one there.
Okay. Chinese sellers.
Knockoffs, fakes. Those are a lot of the issues, but hard to get them to be compliant when it comes to sales and or income tax here in the U.S.
All right. Amazon seller support.
Oxymoron.
They should
Sorry.
use different words.
We talked to them about sales tax issues. They don't
Mhm.
even know how to sell sales tax when I was working with them. You would call and ask for some help, and you would get answers like you would not believe, and they would speak with authority, and this is what you got to do.
Uh,
It had nothing to do with the question you asked. So,
nothing.
and from what I hear, it's not far off when you're talking about topics other than sales tax. There's a love-hate relationship in my mind between Amazon and their sellers.
100%. I agree with you and concur. Yes. So, number 5, selling into Canada.
Lucrative. I think that Canada is a wide open market, and you get to pick and choose whether you want Amazon to handle your taxes, or there's actually a financial incentive to do it on your own.
Interesting. Very interesting.
Very good.
Oh my, that right there. If you're selling any significant amount of dollars or Canadian dollars into Canada, it could pay for itself just by listening to the podcast today. Dave, I pass the baton to you.
All right, Mike, rapid fire. First word that comes to mind, drone deliveries.
Futuristic.
We haven't seen that quite yet. We're looking forward to the drones. All right, I have another one for you. Walmart versus Amazon.
Potential. I think Walmart has a lot of potential. I don't think they've really capitalized on it yet. I think there's a great opportunity there. But right now, I think you got to be on Amazon.
All right, I got 3 more. Elon Musk.
Character. I scratch my head and I say, I wish I had enough money to buy something just so that I can control people's speech or allow them freedom of speech, however you look at it. But he's already devalued the company there. So I don't think it was a very good investment. But sometimes people have other reasons for spending their money.
All right, the future of Alexa.
I think Eddie is going to replace her.
Are they both listening all the time? I have too many devices in my house. I'm like, don't say that. Santa's listening. Who said that? I'm like, I mean Alexa, but she's listening. All right. And last but not least, what comes to mind? Jeff Bezos.
Gazillionaire?
From a tax guy.
Smart guy.
Gazillion.
Yeah. Pretty smart guy. He took a little bookseller out there and bought it online and didn't make profits for a number of years, just kept selling the dream. And now it's a behemoth. More power to him.
Awesome. Well, thank you for participating in our rapid fire segment.
Yes. So we've been talking to Mike Fleming today. Mike, if people say, help, what do I need to do? All of this stuff going on with the states, where should they try to reach out to you?
The best way is through the website. There's some contact forms on there. Its website is sales tax and more. It's all spelled out .com, or the email address. The best one is info@salestaxandmore.com. I'd love to give you my email address, but I get so many emails. You probably
This will
get a
work.
better response.
If this is how you want folks to funnel their communications with you, absolutely. That's what we're going to put right here on the screen. And you can reach out to Mike and his team, and they will try to do their darn best to, I will say, for me, put my 2 cents in. We do use Mike and his team, and boy, they have been tremendous. I mean that because the customer service as well as the advice that comes from yourself and your team has been tremendous and invaluable. So big props to Mike Fleming and the team at Sales Tax and More. Mike, was there anything else you wanted to leave us with before we wrapped up?
Now, my prediction for the future is that income tax is going to become a much, much bigger issue over the next 2 years. So I think that's something we got to begin to prepare our minds for. And sales tax, if we're not compliant already, you want to beat the state to reaching out to you. There are ways to mitigate your past exposure if you're proactive. Once the state reaches out, There's not really any dealing with them.
Game
Very
over.
few options. Yeah.
That's what that sounds like. Mike, this has been tremendous. If you have enjoyed today's podcast and you're watching us on YouTube, and you want to hear more advice like what Mike is talking about, we're going to have a few videos up here so that you don't run into trouble with either the feds, states, as well as other pressing issues. So we're going to put those up on the screen here so that if you're watching us on YouTube, go ahead. Dave and I will join you in those videos so that you can grow your business faster and save yourself costly mistakes. And for those that are listening to us on the podcast, wherever you consume your podcast, we have other episodes of guests just like Mike, because I want to be like Mike in some ways, because I want to find out more and I want to know where we can save ourselves from making costly mistakes. So check us out on circuitloops.com or your favorite podcast platform. Thanks for joining us today, and I will see you in those episodes.
Thanks for listening to What the Tech. Be sure to check out our other episodes featuring awesome tech and amazing guests. Find them on circuitloops.com or wherever you consume your favorite podcasts.